Hello, and welcome to the Financial Room. I'm your host, Natasha Bridge-Mohan, mortgage broker of Mortgage Intelligence and president of the Bridge Group of Companies. Welcome, my viewers. Today's topic is a very fun one. It's called RRSPs, Registered Retirement Savings Plan. Well, we're going to talk about a lot of different uses and advantages of taking advantage of investing into an RRSP plan. Well, 1957 was the year the Government of Canada created this type of plan, and the purpose of this plan was to encourage Canadians like yourself and myself to invest into a saving mechanism to help you retire early and retire with financial freedom. As you and I both know, getting Canadian pension or old age security based on today's cost of living expenses doesn't really do much for our bank account or for our savings potential. RRSP is an amazing investment tool if you understand how to use it and take advantage of its resources and tools. So we're going to talk a little bit about what you could do in terms of if you want to buy a home. So if you're a first-time home buyer and you are married or you have a significant other or a partner who's looking to buy a home, you can actually borrow up to $25,000 from your RRSP each, which is up to $50,000 combined towards the down payment of your home. Now this amount can actually be paid back into your RRSP free of charge, interest-free over an amount of time, which is between 10 to 15 years. Now, the RRSP, you can actually also redeem it without any withholding tax if you're using it for the down payment of your home. Again, it's up to $25,000 for each homeowner, and you must be a first-time home buyer. So that's a really great program and product you can use as part of the RRSP product. Now, let's talk about borrowing to go back to school. Now, if you have an RRSP, you can borrow money for up to $20,000 for yourself or your spouse for any educational program, and not only educational program, my viewers, also training courses too as well. You can borrow again up to $20,000, redeem that amount without any withholding taxes or penalties, and pay it back over a 10-year period interest free. So if you are looking to reinvest in your education or going back to school or going to school for the first time, or you want to help your spouse out financially in terms of getting education, instead of taking out a student loan or a high costing loan in terms of using a credit card or a bank loan, this is probably a better bet for you in respect to leveraging your own investment to get ahead education wise for your career. So again, borrowing from your home for first time home buyers or back to school education, that's good too as well. Now, understanding withholding tax is very, very important though, that you understand when you're investing in RRSPs, you actually can be entitled for tax deduction, which means a nice little small refund every year. However, if you are not careful and you redeem your RRSPs, my viewers, you can get withholding tax anywhere from 10 to up to 30% and then taxed later on at the end of the year as additional income. So be careful when you're ready to redeem that RRSP at time of retirement, you only take out the minimum that you require for that year. Deferring the deduction, that's also very, very important. So if you don't need to put in RRSP this year, you can defer the deduction on another year where you're expecting a big bonus. You're going to be placed in a higher tax bracket to take advantage of those withholding tax deductions. That's good too as well. Also reducing tax deductions at source. That's actually very, very important. So if you're contributing at work in your payroll an RRSP savings plan, you're actually, what you're doing essentially is giving the government a tax-free loan against you, meaning you're lending them your money for free. So instead of waiting at the end of the year to get that refund, what you can do is you can actually connect with CRA and ask them to reduce your taxes upfront to compensate for your early RRSP contribution. So again, you can always make that to a way of making money in terms of RRSPs, in-kind contribution. If you have other investments that are non-registered, you can move them into your RRSPs and start getting those tax benefit savings too as well. Now, RRSPs are great. They are very helpful if you want to retire for the future. If you ever want to watch any of our previous shows and topics, you can always reach us on YouTube. And we look forward to seeing you soon. You can always visit us at www.thebridgegroup.ca, www.thebridgegroup.ca, or toll free at 1-866-553-7467, 1-866-553-7467. Thank you for joining us. And again, we are here for you, the Bridge Group of Companies, home of all of your financial needs. Take care, and until next time.